Saurabh, thank you for doing this.
My pleasure.
This is our first episode of the
Right.
Equitymaster Mint Investor Hour. So you're taking a little bit of a risk in that sense. It's the first episode, but then you are a risk taker after all.
Yeah, I don't think doing an interview with you is going to be a risk. I've
Oh, God.
diligenced you enough. I've researched you enough to make sure this will be a
Wonderful.
good
Great.
outcome. This will be a
Great.
good outcome. Yeah.
As any good analyst should do, research well.
Right.
Okay. So from briefly what I read. So
Sure.
you were born and brought up in India.
Yeah.
You ended up in London for schooling, did your college there, and then you came back to India. So I have a lot of questions around that. So
Sure.
I know why you went. Somewhere there was a line because your father was in a transferable job. He moved
Now,
to.
my parents migrated when I was
Oh, okay.
14. My parents migrated to the UK, and that's how we ended up there.
Okay, wonderful. 14 is a great age to move to a new place. You can still absorb a lot of things. You're still impressionable in that sense. And ultimately, you landed up with the London School of Economics.
Yeah.
And you majored in, of course, I guess, economics and any other subjects that you took that had an impact on you.
No, so I think you get to choose things like economic history and a little bit of politics, but primarily it's economics and economic history. Lots of maths, for better or for worse.
Yeah, go figure, right? London School of Economics, you're focusing on economics.
No, I think it's so. I chose the more mathematical streams, which caused a lot of brain damage. But hey,
Okay.
there is only so much you know as an 18 and 19-year-old.
Yeah.
That's in retrospect, perhaps the maths has made me. What doesn't kill you makes you stronger.
Yeah, that's right. And I think that's that probably laid the foundation for a lot of what you've done. It's hardened you as a numbers guy, I guess.
Yeah, perhaps I hadn't thought of it like that, Rahul, but maybe that's where the numbers
Maybe that's how it worked out.
LSE is very mathematically oriented economics.
Wow, interesting. And when you graduated from London School of Economics, you worked for the London School of Economics for some time, or you went
No,
on
so
to.
there was some of the professors from the LSE had formed a consultancy. Some of the professors from the LSE and Oxford had formed a consultancy called London Economics.
Okay.
So I interviewed in a bunch of places. I got a few job offers, but the job offer from London Economics looked the most interesting because they had asked the most interesting questions in the interview. So that's where I went and worked for. Basically, these were ex-academics who had created a economics consultancy to advise British corporates, British regulators on how to apply economics to business strategy, how to apply economics to regulation. I ended up doing a lot of that. So, for example, the Tesco club card, the Tesco loyalty card, was designed by London Economics back in 98, 99. Similarly, the British financial regulators' first rule book at the turn of the century, a big part of it was my erstwhile employer. So all of those projects were a lot of fun to work on.
Interesting. And there, after that, you moved on and you came on your own and you founded a company.
No, so after that, I became a management consultant. So Anderson Consulting called me. This was the turn of the century, I think, height of the dot-com boom. Anderson Consulting called me. And I also didn't know any better. I thought, why not join the world's largest management consultancy? 2000, right at the height of the dot-com boom, I joined Anderson Consulting. They went public and became Accenture. I still have Accenture shares that they gave me at the time of the IPO. They've compounded very nicely. And I worked there for 4 years. So that's where I moved away from slightly more theoretical academic stuff to hardcore business. And from Accenture, sitting in Accenture, I figured out the business model that I co-founded, the business that I co-founded in 2004 with Nick Paulson Ellis, which was called Clear Capital. And that's where the core of the Marcellus team first formed in 2004, 18 years ago in London.
Very interesting. So at some point, you decided to come to India. So I have a lot of questions. Were you married by then when you took the decision?
Yeah, so the marriage story goes back even further. So I went to school in Delhi, as I explained. It so happened that one of somebody else who lived in my building also went to the same school as me. So we went to the same school from the age of 4 or 5.
Oh, wow.
And she was a year younger, and I was supposed to. My job in school was to, when on the school bus back home, my now wife used to fall asleep, and my job was to rouse her awake so that she got up for her bus. So that's how we got to know each other when we were 5 years old. And then when I was 16, I was on my one of my trips back to India from London. And that's when I thought that it might be a good idea to do something about the fact that I quite liked her.
Okay.
And and we got married in the year 2000.
Okay.
2008 is when we sold Clear Capital.
Okay.
We sold Clear Capital in 2008.
Uh-huh.
And at that time, our son was 6 months old. And the logic I used was that 25 years hence, or 25 years hence, when our son enters the labor market, right? So in 2008, I told my wife, let's do a thought experiment that we're in the year 2025, 2026, right? And our son is entering the labor market. Would we want him to enter the world's third or fourth largest economy's labor market? Or would we want him to enter the world's 8th largest economy's labor market, right? And obviously logic dictated that if you can create opportunities for the next generation to work in the world's third or fourth largest economy by 2027, then you should try to do that, right? And that was the logic which brought us back to India, that you have to look ahead, not just 10 years, you have to look ahead 20 years. You have to think about the next generation, not just about yourself. And if you do that, it appeared to us to be a no-brainer then that you should move to India and raise your family in India.
Long term is really coded into you, into you.
And today, it's even more of a no-brainer. So people who migrate outwards from India today, some people's case, I really understand the economic compulsions, right? It is we all have to earn a living and everybody wants to have a good life. But for people who are in reasonably affluent positions, who have studied in premier Indian colleges, and who are working in good jobs. So when they migrate from India, I am not so sure they do the DCF either on their future earnings or on their children's future. Because again, 20 years hence from now, it's even more of a no-brainer. Your kid should be working in India, not in Singapore, Dubai, or Europe or Australia. 20 years hence, for kids who are being born today, for parents who are becoming people who are becoming parents today, it's a no-brainer that you should be raising your kids here. If you were Chinese, then if I was a Chinese speaker, maybe I would have to do some little bit of an analysis, but I'm not. So it's a quite relatively easy analysis to do.
Wow, we really thought through that one, huh? It was an easy sell, I assume, right? You convinced me on it. So
with benefit of hindsight, it sounds easy. In 2008, it was a 19-20 ka sort of analysis type of thing. But hey, we discussed it as much as one can discuss these emotional things.
Your wife was open to the idea of coming back to India.
So my parents,
pick up all the challenges of living in an Indian society compared to a London society.
Most of my family still lives abroad in the UK, but my wife's family, they live in India. So I think that tilted the scales, I suspect.
Not entirely the logic. There were also emotional connects. It worked out in the end.
Yes,
wonderful. So you came back, and tell me how Ambit happened.
So when we came back, right, we didn't really know much about India. Whilst I had grown up here till the age of 14. Neither I nor my colleagues had really worked in India for any length of time. And hence, how exactly corporate life functioned here was something which was relatively alien to us. So we deliberately took a little bit of time to get to grips with the country. We read 70, 80 annual reports, understood how, basis the annual reports, understood how some promoters were stealing money, went and met those promoters, discussed theft with them. And this was back in 08, 09. Most of these promoters said, look, you've got broadly the right picture, but hey, here's a few other tricks you need to also learn about how we steal money from shareholders, from the public, from public sector banks, from foreign investors. So the first couple of years was a lot of travel. So we traveled as much as we could. Had lots of discussions with companies around their annual reports, around how both the negative aspect, the darker aspect is the theft aspect, the positive aspect is how do you build sustainable growth, how do you create enduring wealth, how do you create enormous outsized success in what was and remains a fairly volatile but fast growing country. So those 2 years were about learning. Then since summer of 2010, a friend of mine, a gentleman called Alok Vajpayee, someone had met upon my return to India. Alok introduced me to Ashok Wadhwa,
Mhm.
And Ashok and I had a cup of coffee in Ashok's office. Ashok being a former chartered accountant from Arthur Andersen, me being from Andersen Consulting, with a strong interest in accounting fraud. We hit it off immediately. And Ashok then said that, look, do you think in the sort of quagmire that is the Indian stock market, can you build a broking business for us? And we discussed it for a couple of weeks, and finally we reached the conclusion that it was worth my trying to build an institutional equities business for Ambit. Thankfully, that did well. And from institutional equities, I was also asked to look after the wealth management and the asset management parts of Ambit. So the 9 years we spent there were lots of fun. We learned enormous amounts from Ashok, from Ambit's hundreds of clients spread across the world. And yeah, that was the Ambit journey, right? You got to learn. We got to learn from very senior people, both inside Ambit and the broader franchise, which I think is fabulous. I think Ambit remains a fabulous franchise in Indian capital markets.
So what I find interesting is that when you came back to India, you actually spend that time traveling and studying. I guess you didn't have a goal in mind of what you want.
Yeah, I've never understood what the rush is for people, right? We've got long careers thanks to advances in healthcare. Yeah. And thanks to advances in technology. Most of us will be working into our 70s. My father, in fact, retired in the UK last year at the age of 74. My father's father worked till the age of 90. So I've never understood what's the crazy rush to get things done in life.
You're lucky the French are not listening into the podcast, because they would be mighty upset if you spoke of longer retirement.
Right. So I haven't. That's why I didn't. And that might be the reason I didn't migrate to France with my laugh.
They're debating 63, 65 or whatever it is. Yeah. So I want to talk a little bit about Ambit, and primarily because I think Saurabh Mukherjea became. He started capturing people's imagination, and some of it was triggered by a book you wrote. But books can only capture that much, right? But there was performance. There were those reports circulating which were very well written. So, one, I want you to talk to me about how did you come about to define those pillars around which you formed this whole approach to investing, if you will, to stock picking and doing business. So I want you to tell me stories from the back, whether episodes in the London School of Economics or in the bus you were going with your future wife. How did those, how did it unravel into leading you to do what you did at Ambit, which really set the stage up for Marcellus? Because from my perspective, Ambit is the defining moment. Marcellus is the result of that.
Interesting perspective. I hadn't thought of that, but yeah, I think very, very interesting point of view. So let me just sort of put it in 3 phases, right? Mm-hmm. And like you, as I've got older, I've tried to introspect both about my life, my colleagues' lives, and we also try to understand, when we invest in a certain company, we also try to understand the promoters' evolution, the promoters' antecedents, to understand what really are the mental triggers, the spurs for a promoter. So I think 3 different sets of influences that have played a big role, not just for myself. I think I suspect for most of my colleagues in Marcellus. Firstly, we come from very hardcore middle class families, right? So if you come to Marcellus, you'll see most of our parents were doctors, teachers, professors, public sector employees, SME owners, right? This is hardcore middle class India, where families, typically both mother and father, absolutely grinding it out 6 days a week on the coal face of the Indian economy, right? So from that comes not just a work ethic. I think the work ethic is well understood, and it's one of the great things about the Indian middle class. It also comes a point of view about the world that, broadly speaking, if you do the right things in life, if you don't try to shortchange people, you don't try to take shortcuts in life, you should get a good outcome. Not only you should be doing the right thing yourself, but hey, Rahul should also be doing the right thing, and almost like in the case of Americans, what they call a puritanical view, right? Mm-hmm. A puritanical view that the right forces should prevail in the world. Mm-hmm. So that influence, I think, came from those 14 years of growing up in Delhi. My mom was a maths teacher. My dad was a structural engineer designing oil rigs, and as I said, almost everybody in Marcellus.
But let's just note you have another maths connection.
That's right. And there was a lot of maths in my childhood. We can discuss that later on. Still absolute pulver. If you didn't do well in your maths test, you could just had it. So there's a big streak of that in most Marcellus families. Right. The second layer was when I studied his economics and economic history at the LSE, I realized that what was happening in India wasn't actually all that negative. And this was actually pretty much the way Britain industrialized. In fact, at a much slower pace. The Industrial Revolution took place in Britain at a much slower pace. America industrialized in a very similar fashion. Right? If you look at America between, say, 1850 to 1950, 1960, right, the 100 years, which was the defining century for American growth, it was very similar to what India went through after independence and is still going through. And in fact, it was what India was going through wasn't even dissimilar to Japan's economic evolution. And thankfully, in our years in London, both in LSE and thereafter, my wife and I watched lots of movies about Japan after the Second World War. So even if you watch Japanese movies of the 60s, it feels very similar to Bombay today. Right, it's absolutely fascinating to watch Japanese movies of the 60s, right? Slums in Tokyo, the local trains of Tokyo, kidnappings in Tokyo, right? So this that whole set of experiences, that education brought home to me that what India was on, I'm talking 10, 20 years ago already, the Indian journey was actually a relatively assured journey of economic progress and economic might. And that constancy, that reassurance that we are on the right path, I think is the second influence, which both helps us take a long-term view in investing. Right, one of the reasons we keep reassuring our clients, and whenever the media gives us chances, we reassure the public that look, just relax. This is broadly going in the right direction. Is that we've studied that history. And the third facet of it was the CFA charter that most of us in Marcellus studied for, and the rest of us who aren't CFAs are CAs. Right? The kind of the accounting education we received taught us the merits of looking for companies which are A, clean on their accounting, and B, generate a lot of cash flow. So that was in a way the final sort of technical education we received post university. That if you learn how to read financial statements, and I think that's an essential skill for an investor, you should be able to figure out A, who's stealing money. For obvious reasons, you should steer clear of them. And B, you should also be able to identify, and this is relatively easy to do, companies which are generating a lot of free cash flow, and you should gravitate towards them. So these three pillars, right, in retrospect, right, in Ambit, I wasn't as clear about it, but these three pillars, one from our childhood days, the middle class Indian morality and work ethic. Secondly, the lesson.
Highly underrated, but very critical.
Yeah, and very critical. And again, this links to the second subject. If you know, and you and I know, and most people watching this know, that roughly 100 million people in India are doing the right thing, that's enormously powerful. Very few countries in the history of this planet have had 100 million people broadly doing the right thing. People say a few good people can change the course of history. Well, in our country, we have 100 million people changing the course of history, and that's pretty powerful. So economic history, middle class morality, and the final bit of technical education, right, which is you learn how to identify good
the
company.
Skill part is necessary. You can't do without.
That's right. That's your final bit of craft, kind of technical education, and you bring the three together. And it's no rocket science. You bring the three together, it works. It's pretty effective.
So I also it's very logical, makes a lot of sense, right? But I wonder what was the reaction of your friends from your LSE group when you told them you're going back to India? Like they must be, tell me.
So I guess part of it, from people who knew me from college, knew I was a bit of an unconventional person. So when I joined London economics out of college, most people joined investment banks and management consultancies, and I said, let me join economics consultancy. So it's a running joke in Marcellus that whatever be the consensus be on the subject, please don't tell Saurabh that, because he's not going to do that. If you ask me, my friends in the UK or my relatives, my parents, were not the most surprised. I think it was the relatives in India who were a little bit more perplexed, right? And ironically, to this day, many of them remain perplexed that why do you want to live here? Why don't you want to live in London or New York? and I explain it to them in the terms I explained it to you. But it remains a source of bewilderment, not just for my relatives. A lot of people in our country. So even in the apartment block we live in Mumbai, most of the elderly people in this building, their kids have moved abroad to pursue more lucrative employment, and I see it in two ways. I see it both as a challenge for our generation to make the point that this is where the future lies, but I also see it as an opportunity. If high quality professionals are choosing not to work here, they're choosing to deploy their talents elsewhere. That means there's less competition for you and me as we build thriving businesses in this massive market.
Yeah, and I like the point you make, because one of the big fears these days is what they call the hollowing out of the society, where the children are going out, but they're enough staying back, and good for them if they are smart enough to grab those
2015, my colleague Pramod handed me Peter Thiel's book 0 to 1. That was a pivotal moment in my life, and we've learned enormous amounts from reading Peter Thiel. He's a controversial figure, I know, and but hey, we don't have to buy into his controversy. We just have to learn from him. And one of the things he says is, if you keep doing what everybody else does, which is you try to go to the most prestigious colleges, Ivy League or IIT, IIM or Oxbridge, and then you go for the most prestigious jobs, right? You are making life incredibly difficult for you, right? A, you're not thinking for yourself, you're doing what everybody else does, and B, you're succumbing comprehensively to mimetic desire. Mimetic desire is, I have no preferences of my own, Rahul. Whatever you do and your friends do and my friends do, that becomes my preference in life. So if everybody wants a flat on pedal road, boss, I also want a flat on pedal road. Right? And that is obviously a recipe for disaster in your personal life, and even more obviously in business life. Right? Unfortunately, for most successful professionals the world over, mimetic tendencies, the desire to imitate the in crowd, is so powerful that it's something that they don't sort of lose too much sleep about, but it's a huge destroyer of time and shareholder value and your own.
And at its extreme, it's the cause of a lot of the fraud, because people are under pressure to do stuff they can't afford, and that's when they get creative.
So the person to then read on this subject is Peter Thiel's guru, a gentleman who passed away, a French philosopher who's taught in Stanford, René Girard. Right, René Girard on mimetic theory, absolutely brilliant stuff, right? René Girard on mimetic theory will teach you and me more about finance, more about business, and more about how to live a good life than any amount of books from business gurus will.
Yeah, I'll be sure to read this. Definitely sounds interesting. Okay, so we know what helped you form the foundations of what made Saurabh what he is today, and then at some point you moved out of Ambit and founded Marcellus. Was it like a quick decision? You already had in mind.
Spent a couple of years. So we spent a couple of years thinking it through, my wife and I did, because we weren't when we moved to India, we were 31. I was 31. She was 30. By the time 2017, by the time we hit 2017, I was already 41. So one had to be careful. The children were growing up, and therefore we had to be a little bit more careful. But we thought about it for a couple of years in terms of, could we financially take the risk? And once again, you can understand, right, basis our mental mindset, we came to the conclusion that, look, I mean, we've got long careers. God has been kind in terms of our health, our parents' health, and let's try to build something. The Marcellus logo was designed by my wife and daughter 10 meters away from where we are sitting.
Wow.
Thankfully, they did it free of charge. Subsequently, I think my daughter and my wife have said that there has to be some payback one day. I've said, we'll think about it.
So give us a royalty for life.
There is that, yeah. So the point of view was that, look, let's try this. Much as we've tried coming to India and it's broadly worked out. Let's try to see if I can build a business which can provide a type of service to Indians which hitherto wasn't being provided. Also, what helped was, by the time I resigned from Ambit in February 2018, Ambit itself was doing very well. All the businesses were making money. Firm was well established, as you said, and continues to do. Ambit continues to do very well, and that gave me the reassurance that I'm not leaving a sinking ship behind. I'd been hired to do a job. I felt I had done the job of building that franchise, and it felt that it was time to try something new in a different phase of my life.
Okay, then of course, Marcellus. I really don't want to talk a lot about Marcellus because I think everyone listening knows the success that it is, and you articulated yourself on how you've done. So I want to step back and talk more about Saurabh, what Saurabh does, right? And so I have listed out some questions which I want to go through. So the first one which I wanted to ask you was, why do you invest? What's the purpose for investing? Because a lot of the times I find is when I'm talking to people, they're investing, they're chasing a return, and they don't even know why they're chasing a return. And no matter what they get, they're not going to be happy because there's no end purpose to it. So I'm curious to know what's your thinking when you're investing your wealth, your money, whether in Marcellus, whether in wherever you invest.
So the question you asked was very interesting. Why do I invest? And interestingly, nobody's asked this question before. So broadly, 3 sets of reasons for investing. We've got 2 children, the early teens, they'll go to college in the next few years, and that education will have to be paid for. So I'm really hoping that they go to college in India and they stay on in India. But ultimately, it's their life and they'll choose what to do. So my wife and I have decided we need to save up for that. And it's a process which has been underway for a few years. In fact, when we set up Marcellus, the main thing I was careful to do was that we parceled out a chunk of money, which we invested in consistent compounders for their education. So my wife said, whatever else happens to Marcellus, this corpus which goes into CCP, you're not going to touch. This will carry, this consistent compounding will carry on till our kids are through with university. So that's
good.
One, right?
Good planning. Yeah.
Second is, I presume some stage in the 20 years hence, we will call it a day, and my wife and I retire. We fantasize about whether we'll be retiring to Goa or Kerala or the Himalayas, but that also has to be planned for and paid for. I did a little bit of maths. So when I applied for the license, the investment advisory license for Marcellus, I had to sit some exams. SEBI has NISM has these exams. So they make you do financial planning exercises. So in an idle moment, I did one for myself. And to my shock and horror, I realized that for anybody who is watching today, if you want a middle class retirement in India, nothing fancy, Swift Desire car, holidays to Ooty and Kodaikanal and so on. If you retire at 60 and you die at 85, to fund a modest middle class retirement, you need 15 crores in financial assets at the point of retirement in today's money terms. So if you're retiring 10 years hence, inflate that 15 crores with inflation, right? So that's the second number which has to be saved for, right? At least 15.
That's a big number.
A big number, and I don't think too many Indian families realize that that's the number you need for a modest middle class retirement, right? If you want a fancy retirement, Dubai holiday or something like that, then think of a number with a 3 in front of it, and perhaps at least 10 after it. The third layer, and we only time will tell whether we can do something about it. So my father's parents, both of whom have passed away, they migrated from Bangladesh in what is now Bangladesh in 1947. Jan 47, they migrated, and my father's father became a very successful lawyer in Kolkata. But my father's mom, through the 50s, 60s, built up something called the Refuge in Kolkata. So she passed away 23 years ago, but the Refuge continues as an orphanage in Kolkata. Thankfully, one of my mom's side relatives, my Mashi, as we call her, right? My Mashi looks after the Refuge. But the Refuge needs more funding, and hopefully, if both time, health, and circumstances permitting, what my grandmom started, what my Mashi is continuing, what my aunt is continuing. Hopefully myself and perhaps my children will be able to do justice to it, because there remains tremendous need in India. There remains tremendous need in every part of India. So that's something we aspire to. At the moment, our donations to the refuge are fairly modest. But hopefully, if life pans out, we'll be trying to do something a little bit more substantive in that regard.
Those are really nice goals: education, retirement, and helping people. So those are great goals, Saurabh, I must say. And even though you make it sound light in terms of how you've planned, but this is great planning, right? Because these are the most essential goals that anyone can have. And so I'm going to steer clear of asking you where you invest. I have a goal not to go there. I'm going to stick to fundamentals, and that's where I'm going to stick. Okay, so my next question. Let's talk about the same thing. When you were investing money, so I assume you've been investing for many years when you were making money. So I want you to tell me one big mistake that you made, and what was the lesson learned, and also tell me a success and what it taught you.
So the biggest mistake, right? By far, my biggest mistake was after we moved to India. Like I suppose millions of others, I became very afraid that what if something happens to me, what will happen to my family, right? And whilst I knew from my education that buying a term life policy is the way to go, right? I still somehow was cajoled, persuaded by a financial advisor. Into buying a ULIP from a prominent public sector insurer, right? Wow. It was a big annual premium number. Every year at June, I used to make the annual premium contribution. And he had shown me a set of numbers that, if you die 5 years hence, aapke family ko itna milega, etc. So I think I bought this policy in 2010 or 11. And after 4 or 5 years, I did the maths on it and said, this is crazy. Compounding at 6-7%. Even if I put this money in an FD, I'll be better off, right? So I called up the agent and I said, "Paisa wapas do." As you know, in these things, they take away a lot of your money. So I said, I don't care. Whatever you want to take, you take. Rest of it, return it, right? And I lost, lots of money in that. But thank God I took it out and invested that money in Marcellus's consistent compounder. So that was the biggest mistake. Because of my education and because of my proclivities towards equity investing, whatever successes I've had have been around equity investing. Some of it is the stuff that I've written about in Diamonds in the Dust or in Coffee Can Investing. And some of it has been whatever combined by macroeconomics education with equity investing, and broadly been able to invest in high quality stocks at junctures of the economic cycle where everybody else has run away from stocks. But the disaster was that ULIP sold by a public sector insurer.
So, at the time when you were sold a ULIP, I used to run another division of this company called Personal FN, which was basically meeting people one-on-one and telling them how to manage their money. And we had branches across the country, not many, a few, but across 7-8 cities. And you travel and meet people. And it was shocking at the number of people who had been sold ULIPs, who didn't even have a clue that where they had, money had gone. Yeah. And I even found some very old people in ULIPs. Right. They would have never made money, and they were paying those high commission fees. I have some crazy number they were paying. And it's just a very sad episode. And all along, Warren Buffett's been shouting from the rooftops. Warren Buffett's a hero over here, right? Everyone's read him, everyone covers him. But yet, people fall for the big numbers that are shown on that.
Yeah, so I think what they cleverly did, and in retrospect, I also learned from that sales pitch that the advisor sold me security, an assurance of security. And I didn't do the basic mathematics on how poor the product was. I fell for the assurance of security that this public sector insurer was providing.
Yeah. I think this point that you mentioned about public sector, I think it's a very Indian thing. Like when my daughter was born, the first thought I had is, should I open a bank account in a public sector bank?
Right.
I don't know what it is, and we've had a private sector in India for decades. The banks are great. The institutions are great. So many of them, and yet we it's just
believe. Yeah, it's a socialist hangover, I guess.
We just believe that. My first Mediclaim, public sector, and And I think there are enough examples of where the public sector is disappointed. For example, UTI. If you remember the Unit 64 scheme, right? The people who put in money, they lost money. A lot of them lost money.
So I think there's a broader point here, right? In our country, in our society, form is more important than, historically, form has been more important than substance.
Okay.
If your form is respectable, your public sector, whether you have substance or not, we don't count so much. If you've gone to a prestigious school or a university, form hai,
that's
substance,
important,
right? Yeah. So that change is also what drives a lot of suboptimal decision making, whether it's migrating abroad or buying public sector stuff.
That's an interesting point. Yeah.
And society, why is form more important than substance in societies? Because if in a society information discovery is perfect, and in fact, if information discovery is low, then obviously you don't know the substance. You have no means of finding out the substance, so you go with the form. And gradually, as information becomes more widely available, whether it's because of these things or whether it's shows like yours or books like mine, as information becomes more widely available, as people become better educated, form will lose away to substance, right? And the brand name will matter less. The actual package, the substance inside will matter more.
Yeah. And I think that's what the revival is all about of a society.
That's right. That's why I call this the remaking of India.
Remaking of India, right?
You leave form behind and you say substance kya hai batao.
Yeah. That'll be a nice day. It's happening. I can feel it, but lots more need to happen. Okay, my next one to you. Name me one investor you admire the most. I think you get this very often, but I'm going to still ask it because I'm going to ask more questions on that.
So we've learned a lot from Bharat Shahji.
Who used to run the famous Birla Advantage Fund?
And so he's been at ASK for the time I've been
in ASK. Okay.
We've admired him. We've spent a lot of time with him. We've learned a lot from how he's thought about Indian investing. And we continue to be we fans of what Bharat Shahji has done for ASK and what, broadly speaking, even ASK has done in the PMS industry. I suppose, again, with the benefit of hindsight, it's no surprise that we decided to set up a PMS. We've also learned a lot watching in the broader Indian context, investors like B.N. Manjunath, the first mutual fund manager in India back in the 80s. Someone, again, I wrote about Manjunath ji in my first book, Gurus of Chaos, and he remains a source of huge learning for us. We've learned from Akash Prakash at Amansa. Again, I wrote about Akash and his success at Amansa and his investment philosophy in Gurus of Chaos. And then amongst the foreign investors, a massive influence for us has been the Stewart Investors team, held by Angus Tulloch, formerly out of Edinburgh. Angus is now retired. Now David Gate and Sashi Reddy. I think David is in Australia, Sashi is in Singapore. Their focus on saying we will not invest in unethical companies anywhere in the world. Companies could be unethical because they're stealing money. They could be unethical because they're selling products which are unhealthy for their customers. They could be unethical because they're polluting the environment. And this was way before they've been following this principle way before ESG became fashionable. So from Bharat Shahji, we've learned the importance of moats, long-term investing. Don't get too lost in this macro stuff. Ki Federal Reserve kya kar raha hai or PE multiple kya hai. From Akash Prakash, the focus on high quality management teams who are on.
You got on mute.
Sorry. So from Akash Prakash, the emphasis, the importance of investing in high quality management teams whose businesses are on long growth runways. And from the Stewart Investors team, from David Gate, from Angus Tulloch, from Sashi Reddy, the importance of investing in ethical companies. And those years in Ambit of writing books, meeting these people, reading up on their investment practices, incredibly rewarding years. And to be honest, that's, I think, the biggest privilege of being an investor. You get lots of time to read, you get time to write, and you're doing a job where with age you learn and hopefully become better and wiser.
So here's the thing that surprised me in the people you mentioned. You mentioned all the people who you actually have a relationship with, right?
Right.
A lot of people even if someone asked me who do you admire, I would probably mention Charlie Munger. But that's what I see of him in the media and what he says, and etc. etc. But you're mentioning people who have a relationship with, which gives you the opportunity to allow them to meaningfully impact your life, in a very personal way.
Yeah, and I think there's another dimension to it, right? So whilst like millions of other people, we are fans of what Warren Buffett and Charlie Munger have done, and indeed of other, American masters like Howard Marks. There are significant elements of investing in India which are very different, which makes investing in India very different from investing in America. And with the best will in the world, these gents in America, they are rightfully focusing on investing in the American context. And therefore, if you try to take what they're doing in America, you apply them in India, you apply their American investment principles in India, I'm not so sure how far you will get. So the people I mentioned have spent 20, 30, 40 years in Manjunathji's case, 40 years mastering investing in India. But because they keep it quiet, because Manjunath is not, shouting out from the rooftops, and he doesn't hold an annual convocation telling the world his thoughts. Others don't appreciate what a Bharat Shah, Manjunath, and Akash Prakash, or indeed the Stewart Investors team represents. But they have spent 20, 30, 40 years mastering investing in India, which, with the best will in the world, is something that I need to focus on.
So that's yet another interesting takeaway. And I'm sure, people are listening and watching that you should keep in mind about, you can idolize people across the world, but you have to give an extra plus for those who are really who are in the market you're operating in, because there are nuances which they would understand better. So, I think you have a good mix.
So if there was, there's Master Chef in various countries, right? There's Master Chef Australia, there's Master Chef India, right?
Yeah.
So similarly, master investors, if you created a franchise, and perhaps somebody should, right? Right? It would be a different show in India compared to what the master investor show in America would be. And perhaps for self-centered reasons, selfish reasons, my list of Indian master investors is different from the list of what an American, someone living in America might have.
Yeah. Since we are talking of Buffett, right? Buffett is like a universal guru, right? Whether we want him or not, he's the guru for us. And he had his AGM recently, of course. So he's even more in the news. So if you were to bump into Warren Buffett, right? What's the one question you would ask him?
Why did it take him so long to buy Apple, right? And how did he finally build the courage and the conviction to buy Apple, right? So from what I've read, Apple is the stock that has made him the most money.
Yeah.
Right? And yet he invested in Apple not very long ago, I think 10 or 12 years ago, right?
No, not that far. It's probably like 4 or 5 years ago.
So there you go. So yet it's the company, right? So in both levels, it's a remarkable investing. Firstly, it took him quite long to get around to it. And secondly, he did get around to it when optically, most of us would have said the P multiple is a little high, right? That's a kind of typical Indian refrain, P multiple high. So it was remarkable investment for someone in the fifth decade of their career, sixth decade of his career, perhaps, to invest in one of the world's great tech companies when it's already great, supposedly already discovered, supposedly already at least fairly valued, if not overvalued. Why did it take him so long? What finally led him to it, and and how did he overcome the standard refrain that people like us get a lot? Ki ye to mehenga lag raha hai.
Yeah, that's the most amazing thing of the Apple purchase was that all Buffett followers believed tech is a no-go until the day Buffett revealed he had bought a whole chunk of Apple.
Right.
Yeah, and I think that shows also the greatness of the man. Yeah? He's willing to evolve.
Right.
His followers did not evolve, I think, until they just followed his lead even then.
And I think that the lesson for, I suppose, all of us is that we all have to be adaptable in our thinking, right? We can't say these are my 3 tenets and it'll be like this 550 years hence. So if he can invest in Activision, invest in a gaming company today, in the age of 92, and interestingly, Microsoft has gone and acquired the company. So there's enormous amounts to learn from investment gurus the world over, and especially that focus on learning, reading,
that's right,
hard work,
Yep.
and in a way, the willingness to disregard
Mhm.
you think of them.
Yep.
Right? Not just Warren Buffett, even the Indian gurus I mentioned. I
Mhm.
don't think spend too long thinking कि
Mhm.
ट्विटर पे मेरे आज ट्विटर में मेरे बारे में क्या बोला जा रहा है.
Yeah. Okay, we are still sticking to Buffett. So one of the questions that keeps coming up is who after you is going to run the ship? And now, of course, he's decided Greg Abel will run the ship, etc., etc. Now, my question to you is that in your household, we're still sticking to the household. We're not going to Marcellus. We're not going anywhere else. How are you introducing your kids to the world of investing? And how are you prepping them to take over your consistent compounders, your personal consistent compounders over time?
So look, I think COVID was a blessing in disguise in that regard. So in sort of 10 meters around where I'm sitting, I sat and worked for 2 years, and in the room next door, one room that side, one room this side, they sat and did their schooling. So obviously, both at lunch, so they heard about free cash flow and ROC and the relevance of PE multiples and how monopolies are built and so on, and you know they're relatively grown up in their early teens, so they could figure out that since our father says the same thing day after day for 2 years,
it must mean something. Let's check it out.
There must be something in it, and I think that's how. So my daughter now, bakes 2 fudge brownies every evening. I try my best to eat one of them, but I'm not allowed. So she makes them for around 25 to 30 rupees.
Okay.
And she sells them in school for around 50 rupees, right? And
that's a business we all want, 100% margin.
And she discussed this extensively with her mom, with myself. And she figured out the raw material cost, the cost of the power. We also asked her to attribute some cost to the oven. Right? She said, oven ka kharcha bhi aapko recover karna hai. And she's generating free cash flow. She's read
that proud.
She's read Kanaz's story about how Theobroma was built. There's a Theobroma near her house. She's seen that. So she has a desire to become a pastry chef, but for better or for worse, that desire to become a pastry chef gradually is getting aligned to a desire to also make it a very profitable venture. Time will tell, whether the pastry chef part of it dominates or the businesswoman part of it dominates. But this again goes back to the remaking of India. A generation is coming through. A generation of kids are coming through, and I see a lot of this in the youngsters in Marcellus. They honestly don't really care, what the Americans are doing today, or the Japanese or the Chinese. Their point of view is this is what we are doing in India, and this is cool. This is the right way to go. Our generation didn't have that sort of confidence. Our parents' generation certainly didn't have any of that confidence. I think that you see this coming through as the kids, thanks to YouTube, thanks to social media, thanks to books, they learn quicker, and we're seeing that also in the rise of the unicorns.
So in this process, when your daughter was going through this, was there any piece of advice you gave her?
I said, just think about the complete futility of formal education and focus on the practical learning that you can get from the real world. So I started working when I was 16 in the UK. I went to school and LSE and so on, but I've kept from the age of 16, I've been earning money. So I emphasized upon her the need to start earning money quickly, and the sort of relative, I wouldn't say the futility of formal education, but the fact that formal education now means a lot less than it meant 30 years ago, when access to knowledge was restricted to universities, right? And we leave it to them to decide whether they want to go through formal education and where they want to go through and what format. But I certainly hope is they will not get wedded to pursuing this or that degree. The credentialing obsession. That our generation had. Ye qualification hona chahiye, engineering, doctor, chartered accountant, CFA.
The form, going back to the form.
Absolutely lovely. Right? This emphasis on form is something that we need to do less of. Linking it to Peter Thiel, the more you obsess about form, the more mimetic you are. And the more you get locked into substance, the more original your thinking will be.
So lockdown, there was a lockdown. Lockdown's over. You're back to work. And let's say, your wife comes to you and says, you know what, we spent 2 years at home. I've saved up a lot of money. I just found about 1 crore of cash lying around. Let it be whatever amount. What should I do with it? What would you tell anyone with surplus cash right now?
I think the advice both at home and to whoever has surplus cash, invest. You're not going to live, none of us are going to live too many times in our life in a country where you have a 10, 20-year horizon, where if you do sensible investing, there's a very high chance you'll compound in the high teens, low 20s, right? And if you just have a little bit of patience in terms of foregoing jam today, you're going to get an awful lot of jam tomorrow, right? Now, you might say, "Nay, boss, I want the jam today and I want to go on a luxurious holiday to the Maldives or wherever, Italy and so on." And, everybody deserves their slice of luxury. But just be careful about how much luxury you seek, because as we discuss it at home, the maths I do is every crore burnt today is 20 crores foregone over the next 10 years.
That kind of thinking simplifies so much, right? The decision-making process. If anyone who understands that.
I think that's the nice way of putting it. Perhaps somebody at home might put it a bit differently.
Okay. This is, I don't have the date. I meant to ask you this question. I don't remember the date, but do you recollect the day where you were and what you were doing when Lehman went bust?
Yeah, very clearly.
What thought did it trigger?
Like, so in a way that the story is linked. So around 8th Jan 2007, 8th Jan 2007, I was sitting with my guru in London, Sir John Kay. Right, he was the chairman of Clear Capital, and John used to give me a cup of tea every other month, and he would ask me questions about the British economy and stock market, and I would answer. And so basically, I won't get into the Q&A, but basis John's Q&A, around 45 minutes into that Q&A on 7th Jan 2008, I realized that the British financial system is going to blow up. So that was 7th Jan. I think 28th Jan or 1st February 2007, we published our first note explaining how the British financial system is going to blow up. Right? Mortgage-backed securities, ABS, MBS, which lenders were exposed, how badly they would blow up, and so on. And then throughout 2007, we got our clients to sell, and sell some more. Right? By Jan 2008, a year hence, we realized that America is going to blow up. So that's when we decided, let's sell the company. I still remember first week of Jan 2008, Nick Paulson and Liz and I discussed, let's sell this company. We're heading towards an almighty financial blow up in America, which means the rest of the world. And that sale took place somewhere in early May 2008. And as I said, thereafter, we migrated to India. So from May 2008 onwards, I was sitting in Powai, Mumbai, watching the world blow up, having thankfully sold the company. This flat that we live in owes a lot to that exit. So in a way, the flat that we live in owes a lot to us being able to preempt Lehman Brothers by 1.5 years. So as June, July 2008 wore on and the world melted down, none of that surprised us because we'd done the mathematics, we'd got our clients out, we'd preempted it. And that was one of the reasons for not being in any great rush to set up a company upon arrival in India. Just spending time traveling. So I remember the day Lehman. I live in Powai, and Powai had a Lehman office. One of their Indian offices was in Powai, right? So I remember walking past it that afternoon, saying there'll be a lot of people in this office who'll be looking for a job, right? And I also remember that I have some friends who work there. So I called them and said, it must be a tough time, but hey, if there's anything I can do, let me know. And then we watched as the world melted down. We watched as the world fell. Next 6 months, we continued traveling. 1st March, 2nd March 2008, I was in Delhi. There was a CII conference where thankfully I managed to get in. And the then government of the day, the then FM, the then chairman of the planning commission, deputy chairman of the planning commission, the then FM, and the economic secretary were fielding questions. And they were briefing the CII audience about the health of the Indian economy. And I remember telling myself 1st March 2009 that this looks like a completely, mouth-wateringly tasty situation. Indian market down 60%. Economy in decent shape, and it didn't take a genius to figure out that the economy was in decent shape. And that's when the bull market began.
That's right.
And then a year into that bull market, I joined Ambit. So I remember very clearly. I was walking in Powai when Lehman blew up.
That's a brilliant call you made. You exited a year and a half. I guess initially it must have been a little painful because probably the markets kept moving in the opposite direction for some more time.
So what happened was first
you have to pay the price for every good call.
So we've never lost that much sleep about the market, but here's what happened, right? And this we've lived through this again and again. So these are experiences that are burnt into our psyche. So I think 28th Jan or 1st February, we published that first note on a big fat note on how the British financial system will blow up. It was called Risk Amplifiers on Full Volume, right? So I was 31 then. Even today, when I read that note, right, it sort of gives me goosebumps, right? When I read that, reread Risk Amplifiers on Full Volume. Now, within 2 days, HSBC used to have a subsidiary in America called Household, which was a mortgage lender. So Household published awful results within 2 days, and that's when we knew that mortgage lenders are going to blow up generally across the world. And within 3 months, MBS structured finance vehicles started blowing up in America, in France, and then it was just a question of one domino falling after the other. By the summer of 2007, when we used to go to, say, various family offices or fund houses in London to present, the summer of 2007, we would enter this large fund house. There'd be a riot within the fund house. To listen to us, and I would say, we've already written about it for the last 6 months. Happy to tell you guys, you don't have to fight. If you want, we can break it into 2 meetings. There are not enough seats in the room. But it was both, we were very young, 31. It was both interesting to see the panic unfold in front of us, a panic we had prophesied and understood. But it was also quite unnerving, especially when I looked at the older fund managers, right, who were in the 40s, 50s, and you looked at the sort of fear written large across their face. So it was those 2 years, very similar set of circumstances through 2017, 2018, right? 2015, I remember we wrote a note when I was in Ambit saying the real estate sector is going to blow up, that Indian resi real estate doesn't really have a future. 2017, we said NBFCs are going to have trouble, and it's relatively easy to do the maths, and we keep telling people. In 2018,
ILFS happened.
The HFL ILFS, then Yes Bank happened, and these are fairly predictable cycles. You just get the hang of it, and you just decide.
You're making it easier than it sounds, because it's a lot of work, but good calls that. You spoke of the finance minister speaking at. So I have a question for you related. If you had to give a piece of advice to the finance minister today, what would it be?
No, I don't think in any era, or indeed in any country, we've pretended to have any advice for the government of the country. It's above our pay grade. There are highly qualified people in New Delhi. In fact, some of my friends are in the finance ministry and in the PMO. Some very good friends are there who are doing a great job. I don't think I have any advice to the government. I think my simple suggestion to those who are listening is have faith in this economy rather than obsessing, as a lot of people do. A lot of people in our country, they intertwine politics and economics. Right? They see politics and economics through the same lens, and the popular media discourse encourages that, and I think that's very dangerous. I'm not so sure that Indian politics and Indian economics are as tightly intertwined as the newspapers or the public discourse would have you believe. And I think for those who are watching, it's very dangerous to mix up your politics and your economics.
Especially as a student of economic history, we know these are cycles that have more fundamental roots: land, labor, capital, technology, productivity.
Beautifully put. The politics is a different lens. I'm not saying it's a superficial lens. It has its place, but it's not as relevant to the arthik sthiti of the country, to put it in technical jargon, as a lot of people like to make it.
Where do you get the time to write all these books? You got kids at home.
So flights.
You got a full-time job, and you're writing a whole lot of books. You're making us all look bad here.
So part of it is flights. So we there's not much to do on flights, right? So just flight. And second is there's a broader team at Marcellus which does a lot of writing, and everybody, the team has worked together now for almost approaching 20 years. We're quite old now, actually. So we've all written so much, and we know each other's thinking, and how our writing style is so similar that it feels like one voice. So when you read Diamonds in the Dust, it feels like one voice, but it's actually three different people writing. Similarly, when you read, say, Coffee Can Investing, it feels like one voice, but again, it was three of us writing. So it's a group of people who work together for a long period of time, and hence our writing styles and our thinking is, for better or for worse, pretty similar.
Yeah. So I want to end with, of course, a Peter Thiel question, right? It fits. So what's the one truth you believe in that no one agrees with you
on? That monopolies are the businesses that make a lot of money, and they are the businesses that change the world. So for some reason, there's this public perception, both in the Western world and in India, that monopolies are somehow evil.
Yeah.
But we're talking to each other on Zoom, which I think would be the most dominant video conferencing platform today. I do my search on Google, right? And you can just join the dots there. Most of our office software and our cloud is on Microsoft. So no, it's not just technology. I've discussed in lots of webinars, Asian Paints, Pedialyte. My kids have grown up drinking Nestle. So I think there's a big dichotomy between how we perceive business and how actually business works and how the world changes.
Yeah, well, you only get the headlines if you whip the big boys. No one will get the headlines, so they are the favorites to get whipped.
Right.
So I kind of agree with you, and especially in a country like India, where I think, at least in the past, looking back, the additional risks were so many. It just makes sense to go with large, proven franchises, which have sustained over time, right? They're also riding a cycle, and that's great.
Provided the franchise is reinvesting in its future, provided the franchise is disrupting itself in the industry, you compound beautifully. And again, Diamonds in the Dust, we have brought this point out, and hopefully in the years to come, we'll be able to articulate this more fully.
I want to get one point across as we end. So I just did a Google search, right, before just getting into the room. And I came across an Economic Times article which spoke of you admitting mistakes in two stocks, positioning mistakes, sizing mistakes. And I don't care what the stock is. I don't care anything. What I really, really liked and found refreshing is the fact that you spoke about it and you explained yourself. And I think people understand no one's perfect. Right. And if you explain to them where you went right and why you went wrong, et cetera, I think that's such a good practice. And I think you've found companies like that in your life, where you're looking at companies, what they say, whether they do that, what they don't do, are they able to explain, and you're doing it yourself. So, I think that was a wonderful thing to see.
Very kind of you to spot that. Very kind of you. Thank you.
And I'm so grateful you took the risk of doing this first episode with me. I hope it went off well.
And best of luck to you. Best of luck to the show. I'm sure the show will be useful for the audience.
Thank you very much for doing this, Saurabh. We'll be in touch, and all the best for all your future endeavors. And do convey our best regards and best wishes to your daughter. Either she's going to become the best chef or a great business person. That's for sure.
We might come to you with some brownies and fudge cakes.
Ever open, doors are open, and I'll even happily pay the 100% margin price.
Fantastic.
Just to encourage her. Thank you. Wonderful talking to you,
Thank you. Bye for now. Bye.